Well, here we are. It's non-farm payroll morning. Thought I would get on the stream early. I'm rarely here because of school runs. Obviously, this is a real, how do you manage this risk, right? I think, yeah, you could just throw a trade on here and flip a coin which way you think it's going to go. Then you'd get out. But if you were the wrong way, for example, you'd thrown a long on here, you wouldn't be, you'd be 7 handles out of the money on your stop, even though you had a stop sitting up here at the risk neutral location of 3 handles or 12 ticks. It's not I don't think it's a prudent game, nor is it a business-like approach. It's gambling. You're gambling. It's going to go one way or another, and if it doesn't, well, then you're hammered. So there you go. That's my opinion. Let's make sure that I've got everything under control here. Got the risk neutral brackets on. Each risk neutral package is 2 contracts. 12 tick stop, first target, first scale at 12 positive, which pays for the runner. And some people don't think that's got good metrics, but so far I think so. And I confirm that that we've got that over here set to both so that I can enter with my keyboard and edit stops and targets with the mouse. There we go. We are where are we actually? We're looking to enter higher in range, which is here. Go over that for a minute. I'm not used to being here this time of day. So here is yesterday's high, RTH session, and here we are right now. So we're within range, but higher than, long time higher than yesterday's close or settlement. Settlement was 49.28.5, and that's, clear down here someplace. So there you go. That's how that works. I will be looking for the stats on the TLab. I have that all part and parcel of this view. This is the screen snap that I post up every day. And here's the statistics. So higher in range. We have out of 2,003 days, 2,005 days, 570 days, or 28.4% of the time, the overnight POC was hit 83.2%, 474 days out of 570. And that's all there is to it. It's just strictly mathematical calculation of, statistical probability that when the amount of times these were hit under this opening condition. That's all there is to it. So I will now go back to, my, the way I do it is these are the cloud notes, which are pushed, the levels are pushed from IRT. This is the full session volume profile, which started at 1700 last night. And this is yesterday's RTH session volume profile, and it will reset here at 8:30. This is the profile of what you see on the chart. Here's up to the open, up to the report, and here's now what's happening after the report. And you see that little blurb right there is right there. It's real logical, real simple, and it's just math and volume. And in this case, volume at price. So what I will do now is go to the EVPOC and enter our statistic, which is 83.2. And I will continue to do that for the rest of them, for the rest of these that are, in my opinion, significant. Overnight mid's always another good one. That's 77.2. And that's all there is to it. Then when we open and the RTH is in full swing, regular trading hours is in full swing. These are targets and places to be aware of, levels to be aware of. 74.7 is the overnight high, which is right under there. My eyes are bothering me a lot lately. Oop. Tick. There we go. And then, of course, when I scroll out, when I roll out and unscrunch like this, I'll have to make sure that these are aligned properly. It's pretty hard to get them right on the spot when you have it rolled in like this, but much easier to find the different values. Previous value area high. Not even on the screen. 69.5 is the close. None of that stuff is here. Everything is way. Let's look at the overnight low. Uh, 49.5% of the time. Now, these statistics have nothing to do with context, nothing to do with the fact that there was a non-farm payroll report this morning. Nothing. Whoops. Oh, go away with that. Bing bong crap. There you go. They have nothing to do with any of that. All they report is the relationship of the number of times that that particular level was taken out or touched in the opening context, period. They don't, there could be, 10 days of major sell-offs in a row. Doesn't matter. The only variable criteria is the opening type, and that's plain as a nose on your face right here. 1, 2, 3, 4. That's it. You can't have multiple variables for statistically significant data. There can only be one, in my belief, and I'm fairly sure that's correct. So there we have a few levels at the moment, and I'll continue to do that as time progresses here. Guess I should have shown how I do that. Let's just take one here. This is the RTH close from yesterday. The previous close is 69.5. So we go 69.5. And there we go. Now, obviously, the percentage of you see how this varies and why it's not in relationship to the greater context, the higher time frames. This is 69% of the time this is going to be hit. And this is 83.2%, and this is 74.7%. And here's at 69 between the two of them. So just have to use these as a rule of thumb and targets or likely targets after the market opens. That's my belief. And I'm sure that's correct. Yeah. Yeah. We weren't able to return to the scene of the crime here. So the non-farm number was obviously not very good. there's all kinds of people that have theories and strategies to trade the non-farm payroll. It's one of the biggest numbers out there and has been for years. And my strategy to trade it is keep the hell out of the way. I think that's got more long-term. I don't have any data captured to support this statement, but in my gut feeling is that's for my trading, that's the most prudent approach. There are three positions: long, short, and flat. And I'd say flat is a really good option here. Some of the prop firms, I don't know about all of them, but some that I'm familiar with, you cannot be you must be flat 1 minute before and 1 minute after major reports, non-farm being one of the major ones. And there's, I don't think they make rules like that up just because. I think they make them up. I think they put rules in place because they know the statistics around that. One would hope that they're, if it's a professional prop firm, that it's not just a gambling video game arcade. It's a statistical business, and that's what trading really is. It's a statistical business. You identify the number of trades. You take a significant number of trades for a sample data set. Minimum, I think, is 50, which incorporate a specific setup with specific criteria. If that study identifies that particular setup in the context with all those specific rules generates a positive edge, then you have a statistical probability that trade will manifest itself to your account by the law of large numbers. In other words, you take every example of that trade that presents itself over time. The positive edge will manifest to your side of the table, and it's the gaming model. It's the casino. They take 20 blackjack. They have very specific rules. They deal each hand exactly the same way. The rules apply exactly the same way. They realize that it's a random business and a random outcome, but they have an identified positive edge, 10%, 1%. I have no idea what it is, but there is a percentage. And so the law of large numbers then requires you to take every one of those opportunities that present. And, all you have to do is go to any casino town and ask yourself who you think is making money. That's what trading is. It's a percentage business, much akin to, or probably the best representative example of this business is a casino. We are essentially in a gaming business, and we're the house. If you're smart, you're the house, and if you're a gambler, then you're sitting on the other side of the table, and you're just, I feel like this is going down. Oh, baby, there's momentum. Let's go. That kind of thing. That's gambling or a video game. That's my opinion, and that's opinion is shared by a lot of pretty thoughtful, intelligent guys. Jim Simon, for example, at Renaissance, the most successful trader, I think, somebody says, made billions of dollars, and they were all mathematicians. He recruited mathematicians out of every major university he could, MIT, etc. And they approached trading exactly as a statistical business and became one of the most successful fund managers and funds ever. So a lot of people smarter than me. It's not just some idea I cooked up milking the cows. It's a proven theory and business model. And here we are. We tested up to the overnight mid. Back down here again. Now that was a 10-point swing. So that's an exceptionally good one, but I have no vetted or proven trade around that. What's that entry? Oh, it went up. Now I think it's going to go down. I mean, that's just contrary to what I was just talking about. Test of the mid after the non-farm payroll in a, previous extreme up market. Come on. If you take that trade, you're gambling. Simple. And if anybody says otherwise, I would just ask them to please show me their data. And I'm pretty sure it'd be crickets on the other side of that question. And gambling is fun, I mean, hey, I'm sure a lot of people that took that short and got all excited and saw it coming up here to just below this big liquidity bump and then took the short are pleased as punch with themselves. I would say. And good for them. Maybe I'm crazy. Yeah, that's also a viable possibility. Yeah. Back down to the overnight low. We'll see if we push that down a little further. These are high volume nodes pushed from the market micro composite profile on my IRT. These are entered manually. This is, of course, no longer, I better not say that. I was going to say no longer the micro composite high from after yesterday, and this is the low volume nodes that I've entered manually. IRT will push both high and low volume nodes, but I have not figured out a way to put them into one column and identify them by different colors. There's probably a way, but I kind of feel there's a lot of value in entering a lot of these levels manually because it requires looking, interpreting, and in my case, remembering what they are. If they're just automatically flopped on here, well, they're kind of meaningless. Here's yesterday's settlement. So looks like they're going to trade it through that low volume node down to settle. And we are very definitely yesterday's close. Well, we closed right on the highs yesterday, and there's the previous high. So in reality, this is lower in range, not higher. Stupid. I'll put this on so these changes can be. So this is actually lower in range because here's the close from yesterday, the high from yesterday, and we're trading down here. So this is yesterday's range. Here, there's a high, there's a close, and we're down here. That is lower in range. Simple. That's how it works. And then just get those numbers from the other from the study. And I just do these so that I have the reference in front of my face, right? That's all. Now, one of the things that's important to note is okay, we've got 83.2 from higher in range for the overnight EVPOC, right? So this is from higher in range. Now it's lower in range, and the overnight POC is 84.6. So it's just, 3 percentage points different. So there's not a great difference between these things. So it's 83.6. Boy, that damn noise is irritating. Okay, and I'll change the rest of them. And the overnight mid is 82.5. That was right here. Whoop, whoop, whoop. 82.5. There's not the point of that is there's not a great difference between these values once you have them from the different opening types over such a large data set, which is also kind of nice. And the overnight low, 68.9. So you see it now. These are changing more significantly. We'll bring that down here. And previous close, 71.7. So very little change. And I'll look at other levels here as they become more relevant. So liquidity just disappears at the number, ahead of the number. They wait for it to flop around, and then the algos start turning back on. They turn all the algos back on, and everybody steps into the market, and liquidity picks up the pace. Pretty obvious. Pretty obviously identified by the heat map and book map. This side is the heat map and the colors here. What am I doing here? Well, I think something happened that I don't want to have happen. Let's check. There we go. Okay. I'm going to be right back. So we are now across the 8 o'clock hour, Eastern or Central Standard Time, and opens now 28 minutes. Get my stuff ready to post here. I post a screenshot every day to Bookmap Traders Lab, just to kind of try to contribute a little bit. I've done it for a long time. I get up first posts in the morning are the economic numbers for the day, and then in the case of this, couple of weeks earnings, and then I post the composite kind of chart. It's the full session, shows the full session. Well, here I post this every day. It shows the full session. Full session are these, or RTH are these, and the overnight are here. You can tell the difference by the colors. and also by the time, of course, but, just quickly looking. It's got some stats, has some price levels. Then all the price levels are out here, and this is just my ticker, which I leave alone. I make a copy of the screen grab of this and post it every morning at 8:20 on the TLab, which is called the Traders Lab. It is a bookmap Discord chat room started by a guy named Tom B, who appears to me to be the real deal and a real pearl in the garbage, because he's not trying to sell anything. He's not trying to be a guru and call trades. He's just trying to genuinely give insight into auction market theory and help whoever's in there get better, which is, words fail me to express how rare that is in the internet. I don't know about anybody else, but in my years of doing this, Jesus, if you're not wearing your hip boots, you got BS on your shoes. That's for sure. Most of the time. And I can't say that for everybody in that bookmap traders Discord area, because I don't follow anybody else there. The one or two times I've dropped in, I thought that some of the other guys were, maybe not real traders, or definitely one or two of them are trying to sell everything, their website, their indicators, their everything else, where Tom is not. So it's called Bookmap Discord chat, and you want to find the Traders Lab, Tom B. Who knows what his last name is, but that's it. So I would heartily recommend that one for sure. And so that's where I post this every day. That's what brought that big dialogue on, I guess. And it looks like we're kind of bottoming out down here on settlement, which is absolutely no surprise to anyone, I don't think. One thing I do want to do here is I want to get back to my trading charts, which is this. Now, when we open, I'll change these charts to from full session to RTH or day session. That affects the way the labels are pushed to bookmap. And this is the micro composite, so you can see what happened yesterday. That's pretty funny. So 49.63.75 is the micro composite high. 49.63.75. So let's go right over here. And they pushed it up, 49.63.75, right? The reason these are important to keep track of, in my opinion, there's a lot of fuel living up there. And overnight is tested up there. Is that? No. Okay, I got it. Yeah, there we go. And this looks like it needs to come down a little scooch here. Okay. What else we got going on here? In the overnight VPOC, the micro composite VPOC is still 49.17, which it is 49.17 right there. Okay. And low volume nodes, well, we've got this 60 still living over here. And then the high volume nodes are pushed by these green lines. And they are these represented on the book map here and here. So we've got the new micro composite high, micro composite low hasn't gone any place, I don't believe. 48.66. Jesus. So far down there, huh? 48.66. Oh, it did get pushed down there 10 points. again, the reason I find these valuable is the idea of the trading, or the philosophy of my theories about trading are that you want to the biggest fuel in most of the trading opportunities that seem to present themselves are based around retail stops, retail fuel. And so these levels are where traders would likely put their stops. Tom has a saying, don't think like a retail trader, don't trade like one, or don't act like one. Oh my God. Anyway. All right, now we'll go back here to the post for 820. That, making sure that's working. There we go. All right. Got, several minutes here, but still. Okay, so we've got our levels in. Cloud notes are pushed by. What happened here? Well, the mid changed, of course. That's understandable because we extended lower. We've got to keep changing these around. Same thing with the overnight low. It's not a secret, is it? I don't think so. And this is yesterday's mid. That's probably got a relatively significant. Previous mid is 70.7%. So there we go. There, that's how we do it. And now, patience, grasshopper. I would suppose it's a lot of people have been hitting into this, and I'm hoping have done well. I don't trade on a random number. I think that's got a higher probability of losing your ass than not. They brought it up here, sold it back down here, brought it up here, and why? What distinguishes this as a spot to reverse, other than it's just below this liquidity in this low volume area here. But that's certainly not a statistically proven trade opportunity for me. And I'd be prone to call BS for anybody that said they had one. You'd have to go back and look at 50 instances of the non-farm payroll report reaction, which is what this is, where it was the same context. In other words, when the report came out, we were trading higher in range, basically, because there's a close, right? So we'd been trading higher in range in the ETH leading up to the report, and then a big that kind of a sell-off. So those are the parameters that would have to be constant, and then you'd have to have at least 50 examples of that data set to judge the statistical significance of it or not. In other words, an edge or not. I don't know anybody that's done that. It's a lot of work, I don't know. I would bet, I'm sure there's hedge funds, quant shops, those, they've got people paid that do nothing but statistics all day long. But I'm talking about us, the masses that are basically retail. Yeah. So I don't think, I'd bet my bottom dollar that nobody in the TLab, for example, has got anything remotely resembling proper statistics around the non-farm payroll. I'd be surprised. Anyway, so we'll just Got a few more minutes here before the post and then the open. I'll be right back. Take a opportunity to get some water and a bio break, etc. So 3 minutes till the post, and then we open at 8:08:30 Central Standard Time. Now 8:17. 13 minutes. Just recap. This is the full session volume profile from started at 1700 last night. This is the current or the RTH session volume profile, and it will reset at 8:30 today. This reflects the volume that's been traded on the chart. You can see where we led up to the non-farm report. Got a little hiccup right here where they little teeny amount of volume there, I guess, and then down she went. The darker, more muted yellow here is the VPOC for the full session. A brighter yellow is for the RTH session. I don't have any indicators. I have VPOC, VWAP, and mid. And this blue line over here is correlated market, which is representing the relationship of the movement in the NQ to the ES. And that's about it. Those other indicators, I don't have them update overnight because I don't care. This is mid. When we open, it'll be in the middle of this. And this is the brighter or the regular trading session VPOC, which will also be in the middle of the current. I mean, be the POC of the current session of RTH. Wow. One of the things about Bookmap is it's so easy to get all screwed into this thing where you're looking at, this is 1 minute. I mean, you can get into nanoseconds over here. Well, this is 5 seconds. That's ridiculous. I think that it's, I don't know, maybe that's the way to do it. Maybe that's the way to trade it. I don't know. I don't think so. I have to have a larger picture. That's why my primary trading screens are 2 side by side, the Bookmap and the IRT. Well, that's not showing. That's showing you the post picture, but with about 4 windows, so I can always keep an eye on the bigger picture and not get all spooled up over micro movement. And I'm always continually narrating and trying to be aware of the range to scale, the risk return, and those things, which are part of my trading plan and the key elements of the trading plan. The risk neutral setup is two comes in packages of 2 contracts, both with stop at 12 ticks or 3 points. The first scale is positive 12 ticks, which means then that the second runner or second contract is riding free. So the worst that could happen is a scratch. Now, taking those a lot ruins all your metrics, but it doesn't ruin your account. So that's the one thing that's important that I'm discovering is that the risk to reward ratio has got to be great enough on the winners to compensate for and continue the positive progression of your account, absorbing the losers or the full stops. Everybody takes a stop. That's not any surprise. That's the cost of doing business. Just like casinos lose hands. Same thing with trading. And the probability of the next trade, no matter what you think or want to think, is 50-50. You could have 50 winners in a row or 50 losers in a row and say, oh, the next one's got to be a winner. Bullshit. It's the next probability of the next trade is 50-50. Absolutely. And so you have to realize that this is a random market, and then the possibilities of the probability of the next trade is random. Therefore, you identify a statistically significant positive edge around a setup with absolutely fixed criteria, and you take as many every time that presents, you take it. The law of large numbers then will bring that percentage to your account. It's a casino. It's the exact model of the casino. That's what's important. So here we are testing the low. How low can we go? Well, we've gone through that irrational exuberance yesterday. Looks like. Traded across all of this noise here. Oop. Didn't do my snap here. Falling asleep at the wheel, busy looking at stuff. Looking at the market and thinking about the market and not doing what I'm supposed to post here. And now that that's out of the way, I can switch back to my trading screens here. And again, at the open, I'll change these from ETH or the full session to the RTH session. And that's the way that works. Five minutes till the open. What to expect here? What to expect? Well, this is the overnight. We opened up way up here, traded pretty much across. Linden came in and down she went. And then this is non-farm. Now we're trading out down here. So the thing about this is, I hate to screw my stuff all up here, but here's overnight. But look at this noise yesterday. You know, we've repaired all this ridiculous low volume string of singles, whatever you want to call it here. I don't know, repaired it. We've traded back over it. And we're at least down here a little bit in range again, lower in range. We're value. There really isn't value yesterday because it was pretty much of a trend day, and there's not value isn't considered viable or accurate in a trend day because price is seeking value, looking for value. What will they do? Will they continue lower? Will they want to take profits on these shorts? That's a big what? That's a big if, I guess, huh? That's a pretty big if. And we open in 3 minutes. Damn it. And we're open. Boom. You see the reset. Here we go. This is the first location of the POC. I track these by typing them in here or adding these flags. Obviously, here's another one. I'll show you how that works. Obviously, right now it's real easy to see what the POC's been doing. But as its day progresses, you scroll off the screen to the left and, rather than winding back and forth all the time, you can just see where we are here. That's the thinking. That's the thinking. Okay, now. Yeah. So we have an opening swing up to the value area low test right here. And now we're poking around and we've been up and down, right? It's obviously very simple, or maybe not the right approach. Let me start over. The VPOC fluctuates very erratically and very quickly at the open because there's no volume traded. If you got 2,000 contracts here and 3,000, and 2001 up here, it only takes 100 contracts to move it. So that's how it works. As the day progresses, the movement becomes more deliberate, and it takes more trading action to actually get it to move. So that's how that goes. So there we have a swing high, and I guess we're still looking for a swing low here. You can see settlement there, and the overnight low, which is usually a fairly dependable statistic. The overnight VPOC is always the biggest one, and I guess that's way up high there. So we've tested lower, we've tested higher. We could just find ourselves in an open auction today. And I'm thinking I'm going to sneeze here. Stand by. I don't have one of those Stream Deck deals, so I have to look around for a mouse or figure a hotkey on my keyboard or something so I can quickly mute off and do things that are required. So here's our, here we now have all of our little lines in focus. Here's our mid, VWAP, current session, this current RTH session, VPOC, and the full session VPOC is more muted yellow in here for this session. So, or this, session volume profile. And that's how it works. That's all there's to it. And the correlated market down here is NQ. And right now, it's a small range, less than 10 handles, and all of the, VPOC, mid, and VWAP are parked on top of each other. Right smack dab in the middle of the swing. I would have thought that got 11 moderators. And here we are dancing on the ceiling. No, that's VOC. There comes the full session, more muted. You see POC down to here. So there is the entire cast of characters, the current session POC, the VWAP, the mid, and the full session, and the correlated market. That's it for indicators and whatnot on my screens. That, I need to get some statistics about the full session VPOC. I think that seems to have value, in my opinion. And there we go down again, you see. And then no sooner do I say that it then price jumps the other way. Map is now going to require you to be a subscriber. So here we are, rotation, rotation, rotation. Bing, bang, bong. And we're doing it all in about 8, 7, 8, 9 handles. Oop-de-doop. A little higher view here. This is the IB high. This is the IB low. And there we are. Oop. Damn it, I keep doing that. So they're trading back and forth over the VPOC. They have both aligned the current VPOC for this profile and the full session VPOC for this full session volume profile have aligned right here. So that means everybody's on the same page. And now we have Michigan numbers out at 9 and what else? Something here. Boop. Yeah, we've got the Michigan 1-year inflation number out at 9. Factory orders out at 9. And then Baker Hughes rig count and that kind of stuff at 12. So, yeah. IB high is going to get pushed up again. This will be the second time. This is the IB high. This is the IB low. There's no magic, nothing magic about it. Oop, am I showing that? Yeah, metal mouse. I can see it, I guess. Okay. It's just the high and the low of the first hour, period. Those are old terms from market profile days. So much of trading, and I guess by extension life, is, people like to get a bunch of buzzwords and stuff to make themselves seem more relevant and in the know, and quote unquote. But IB high, IB low is real simple, and it's convenient to identify the high and low of the first hour of the regular trading session. This session right here. There's the low. There's the high. Period. And in a second, this is going to bounce up here because these levels are pushed from my IRT. They are updated every 30 seconds, but Bookmap only refreshes the cloud note columns every minute. So there's that. And I neglected to do this. There we go. And I just noticed that when I know. What am I doing here? Just noticed that when I saw the view app and things were all out of whack. What's going on here? My IRT is not responding properly. So I will not be trading this because that's no good. Give this a minute to think here. Can't cancel, can't do anything. So we got a big push to the upside. Trading up almost to the overnight mid, which is usually a very viable statistic. And above that would be the VPOC. I'm so disappointed that my IRT has decided to take a dump, apparently, and become unresponsive here. I guess. Yeah. That's pretty disappointing. And I would suspect that we're going to take that mid and probably the VWAP. VPOC, I'm sorry. But this is pretty disappointing here. I don't know what to think about this. Now, there we go. What the hell was all that about? I don't know. And there's no lag in the data. There we go. Well, it figured itself out, so that's pretty handy. Pretty good program. Pretty good, solid program. And now we're going to take out that overnight mid. Well, I tell you, I can't catch a break. It's amazing. Looking for a trade higher, and then the damn thing freezes up. And now anything above here would be in my opinion, would be a breakout or more or less a FOMO trade. So at this point, I got to wait for it to have a pullback and continue higher for the VPOC, which is way up here. Yeah, damn it. That's really frustrating. That's quite frustrating. Huh. Ridiculous. And if I were to intra trade at this point, I would consider that a breakout and more or less of a FOMO trade. We're right at the top of our game here with our IB high, though I do think we've got higher ground above us. Now, could I enter along here? Let's just look at it rationally and logically. It's 44.75. 45 is the first obstacle. No possibility for a scale. So that right there just makes that trade opportunity invalid. The first scale for risk neutral needs to be before the first obstacle. That's the right way to say that. And now could very well rotate it back down. Mid, VWAP, and POC. So in theory, that's a possibility. Now I'm mad, so I'm going to go have a bio break. That's so irritating to be watching for a setup like that and then have something freeze up. Damn. Well, magic of trading. Just irritating, but here we are back in the deal. Well, so down to VWAP mid. Who'd have thought? Who'd have thought? What'd I say? Okay. So we got up to and took our overnight mid stat at 82.5% right over here. It was a lovely one. I was looking at that, and then IRT decided that I wasn't going to be trading that because it froze up for whatever freaking reason. I don't know. I've tried to, my philosophy is to use the best tools that are available to me. And so that's what I try to do. I've done that in my whole life: construction, flying, sailing, ranching, all the stuff I've ever done. And I guess that's where I got it from, is the early years there, growing up on the ranch and realizing you need to work smarter, not harder. So this computer, I build my own trading computers. This is a Intel 129,000K i9, Windows 11, 64 gigs of DDR5 RAM. Probably the lighter end of the, obviously super gold modular power supply and that kind of stuff. And the probably the light side of my thing, of my rig here, is a 3060 RTX, a GeForce RTX 3060 GPU. I probably should be up in the fours someplace, but typically trading isn't GPU intensive. If I look at run a stress test there, it's very, very low usage. Most of the time, the fans aren't even running because there's not all the ray tracing and all that game junk that they're designed to do with trading. And I only use this computer for trading. So something like the IRT freezing up, I have no freaking idea why that happens. Just the magic of trading, I guess. So we had a VPOC migration down, back up again, and we're just slamming around the no place to trade zone as far as I'm concerned. I don't know what the hell that rhythmic connected. Yeah, I don't know what that alert is. I hear it now and then, and I don't know what it is. I'm on a 10 gig fiber optic with, just under, they're never right on. It's just under 980 or 90 Mbps up and down. So that shouldn't be a problem. And I'm not real sure what that audio alert is. It sounds like a disconnect or a keystroke or something, and I'm not doing anything. I got to get to the bottom of that one of these days. Yeah, I don't know what all this racket is, but with IRT locking up like that, I'm a little bit apprehensive, and that whatever that whistle go, that alert is, it's kind of unnerving. You can see that the IB high has been extended now a couple of 3 times. It looks like we're just now above the mid. That's not coming from anything I see here. I have rhythmic, OBS. Oh, is it? I wonder if it's Journalytics. It is 5-minute factory warning orders. Okay. I have Journalytics because I've been a bookmap owner for a long time. So there we go. That's what it is. Well, I'm going to have to mute the bing bongs there, I guess. Why would you need to have a license key? Back up to the overnight mid. So that was I'm glad I sorted out that noise, the alert. So that's maybe change that to some sort of an audio thing that says, whatever it says, numbers at 11 or the hell that was. Something it was alerting about there. So that's good to know. I mean, that's a handy alert. If you get involved in the time and focused and don't realize there's a number coming at you, that can be a pretty disappointing turn of events there. And we'll be looking for a IB30 at the top of this hour. Now, the IB, there is a long-standing statistic that either the IB high or low will be taken out by price at some point within the regular trading session. The IB high and low, again, are set at the end of the first hour. Okay, that's a real easy stat, but it's high. It's 90+%, 95 or something like that percent of the time. So someone has cooked up and done the work to identify the IB30, which says that the high and low of the first 30 minutes are also extended either up or down in the second 30 minutes. So that's acquired the name IB30, and then by extension, the old one, the original statistic, is now thought of as the IB60. So at the top of this hour, I will start looking for the IB30. And be pretty disappointed that I didn't take the run up to the overnight mid that I was watching for when IRT decided to freeze up. The minute I see anything like that, a freeze up or whatever else, problematic issues around data or most importantly, my platform and my setup, I don't do anything, obviously. And here we are at the top of that hour with Michigan numbers and a couple other things going on. So, yeah, let's see what happens here. We've got all of these guys down here in a pile, mid, VWAP, POCs, both together. Liquidity lifted off the book. There's no liquidity like here. Nothing here. This has been up here for a long time. So what are we going to do? We're going to test down to the VWAP mid and POC. 41 to 37 would have not really be enough range. 42, but we've got to remember 3 handles, 12 ticks, before the first scale. So going up or down, it's the same thing. This is 42 to 46. So you could get a scale off, except liquidity is now coming in here and holding here at the mid. So that's not 3 points, right? That's what makes being really disciplined about a trading plan and the rules of one. Find myself not trading much at all, which may or may not be a good thing. Right now, I wouldn't be able to take a trade either direction. I guess I could take, we've got this little micro composite area right here. This is essentially a micro composite VPOC. So we're slopping around that, right? A mean reversion of a nanosecond. So we get down here to 41, 42. Just barely scale out ahead of this mid. Ooh, breakfast. Thank you, baby. My sweet partner, wife, brings me a lovely breakfast. She's Vietnamese, so I'm used to eating really good. This is homemade. Gyozas are homemade dim sum. Yeah. We have a 45 or say 44 to 37. And if we're in the middle of that any place, it's almost impossible to have the scale requirement met and have a reason for trading. Is there a structured trade here flopping around in the middle of no place? I don't think so. This is a consolidation. Obviously, right here, boom, just consolidating like crazy across there. Yeah. So, bummer. Well, what could happen next? We've got 83.43. Yeah, I think that's what that is the POCs. We've got 6,700 up here. 5,000 here. So this would be the nearest location that they could get the POC to migrate up, which could give some impetus to higher ground. At the moment, they're just slopping around in the middle and I assume making big batches of retail soup. And I can't deal with the smell of this great stuff here. I've got to mute off and have a bite. And here we come down to the mid VWAP, probably POC. Certainly isn't a trade to take, I don't believe. Anything from here now is middle out, and that's not something to take in a rotational day. And, could very well be a wonderful trade and make a lot of money for someone. But this is the mid, this is the VWAP, and here's the POC. So all these retail traders clear back here have got their stops under here. Taking a trade from here long, this fuel down here is not in my plan. That's not conservative enough for me. If it took out these stop run and look, then some comes back across, that's a different story. But I'm not saying that that's a bad trade if that's part of your plan, but I would challenge anybody to show me how they were able to vet that trade or, derive a significant data set that statistically identifies a positive edge. And I think that's the key to this whole shooting match here. The hell? Yeah. I think I'll stop interacting here. I seem to be making everybody mad. People are talking about taking VPOC mid trades out of, higher ground. And that's just ridiculous. There's no possibility that you have a setup or that anybody would say trading from the middle out in a rotational day is a good, sound trade plan. But I need to stop saying stuff like that. I also made a couple other comments. Somebody was yapping about something. It's just sometimes I get kind of, I don't know, it's not annoyed, but people say things that maybe traders who are less experienced or whatever don't realize it's crap. Like, somebody coming on and saying that a Martindale is a great way to trade. Well, yeah, if you got unlimited fund, if you're the Fed and you got unlimited funds, sure, you can just keep doubling down till the cows come home. But probably that isn't going to work out so good for you in the long run. Most people will go broke. Now we could be looking for that IB low. Again, the problem is 96 to 93. Sorry, 37, 36 to 33. So there's only 3 handles in this entire area here ahead of this obstacle. And that would mean trading VWAP or VPOC out, middle out, which is not anything to do that I'm aware of in a rotational market, which is what we have. People just, it's interesting how humans can rationalize pretty much whatever they want. So I guess it's not news to anybody. Still surprising sometimes to me. And I'm sure I do the same thing. That's why I'm so vigilant here to continue babbling about, narrating on about trade plan and making sure that there's enough range and sticking to the rules, because I too am just as prone to seeing something and thinking that's going to be a great opportunity to grab and go, you know. This is the full session VWAP that keeps flopping, or POC that keeps bouncing around. This is the current session right here. This is the full session, which is right here. Now, they may trade it so that this one migrates up, and that could genuinely be a trigger or a setup. VPOC migration is definitely a setup. It cannot be taken mechanically, and it has to fill the rules. So there's 39. If it migrates up there, there's 39, 40, 41. There's only 2 handles to the obstacle. So in my opinion, for my setup, that's not a doable deal. That's not a viable setup, assuming that it does happen. And it may not. I'm just making gotta have some more of these wontons. I'm hungry now. The smell is killing me. And now what are we doing here? There we go. Probably higher. You see how this reaction to the full session VPOC seems to be? I've noticed that way more than once. Of course, you could say the very same reaction down here, right? Test up. Just trading around the VPOC has always been considered a real bad idea because it is, by definition, the most highly traded price. So what's the likelihood of more trading around that price? Huge. Therefore, it's the old adage from the market profile deals: don't diddle in the middle. And here we go. They have not satisfied the IB30 stat. It's way too close here. Looks like that's going to happen now. However, that means that they would extend this high up or the low down. Low, lower. The higher, higher, or the lower, lower. Seems pretty obvious it's going to be the higher. The IB high would be extended, but that's very definitely not a given. It could certainly turn around. I think yesterday or the day before they got up here like this and then took out the low. Or the other way around, they went clear down to the low and then took out the high without touching the low. It's definitely not a given. And we're at 9:17 Central Standard Time. I think all the numbers have befallen us. Now we've got the crude inventories, Baker Hughes rig count, that kind of stuff coming up, which has a pretty significant impact on crude traders, but that's not really me at this point. I've done that before, but again, it's pretty obvious what we're doing over here. This the green lines here are the IB, by the way, IB high and IB low. They obviously move until the first hour is over or set, whatever you want to call it. They keep teasing it, boy. They're teasing that high. Yeah, it's frustrating. Look at all this liquidity laying up here, right? Now, this string of singles, this real low volume area, one would assume that they would just go ripping through that like a hot knife through butter. But you have a lot of liquidity laying out here, which would be stops, I suppose, from people grabbing shorts on the way down. So as far as I'm concerned, that's a real low probability. Got all this liquidity in the book, and zippity doo dah down here to a little bit here and a little bit there. Then the full session VWAP or VPOC and VWAP mid deal. So and that's not to say it's not going to go blazing right through all that stuff, but I guess the idea would be to take a long here in the low volume area, lean on this high volume developing value area high, and see if they run it up. But that's not remotely an asymmetrical trade. And where are you going to put your stop? So if it's just mechanical, it's going to be 3 points lower. Going to be right. Your stop's going to be right here, which is kind of okay in a sense that it's below this previous liquidity, but it's ahead of all of these values down here that a lot of people watch. So that keeps migrating around, which is kind of almost makes me want to take a trade. I've been noticing a positive reaction quite frequently to this full session VPOC. I'm late now by talking about it, but that could have been justified as a pullback in all these areas across here, or along at the IB 30 and points north. Ideally, I guess, would be to come back and test this and then go back up. And then as I listen to myself, I wonder if I'm starting to develop paralysis by analysis. There's the IB 30. And real tempting to take a long right here, of course, which is a breakout and a bunch of other FOMO crap. So definitely trying to not do that. A lot of buying right there that doesn't seem to be getting any traction. $173 stops taken right there and 10 here. So does that mean exhaustion? Or are we going to get some buying bubbles going on here and get up through these lows? Likely. I guess. Likely 6 to 9. Real close to this liquidity value here. IB high has moved up here now as it should. So that's the first IB 30 movement. I think I'll wait for a bit here. Have another. And of course, the second I mute off and stuff a wonton in my mouth, it pulls back here and they get a balance. No, that would be that would have been a viable entry ahead of the location. More of the IB high. Now this is chasing, but we've done what I was anticipating, which was to migrate through these low volume area here from this morning, from the non-farm. That was a good location right there off the mid and the overnight VWAP. Oops, sorry. Didn't realize I was smacking my lips here on the microphone. Now, this is an area of interest here where we're back testing this mid again. And we've got the IB high in 4 minutes. I'm going to entertain along here, I think. Make sure I've got everything set up properly. Because my thinking here is the IB high, and then eventual target would be the overnight point of control. They've tested this mid at about a cajillion times, so likely they're going to go down. Developing value area high. Oftentimes that's a line in the sand. Be nice to see him bring that 83. They could get that up relatively soon, I think. The VPOC migration from here to up in here somewhere. We've got 83-ish, and we need another 1,300 up here. Developing value area high. Is that a developing viable place to trade? Right there, the test would have been pretty much scaled at that point. Oh, look at there. What the hell was that? Stop run, bam. Well, that'd bum you out. That'd ruin your day. Huh. That's kind of crazy. I think I'll watch this for a while. This is a job for another wonton, I'm pretty sure of that. Yeah, so here we go. They're testing that developing value area high. They have yet to be able to migrate up the, we're going to have the VPOC migration here pretty quick. I'm going to go with this long, I think. Now the IB has been set. The IB high and the IB low will no longer move. And the original IB 60 stat is in play. The IB 30 stat was, very successful. For me, I was not in a trade, but the stat was achieved. Let me put it that way. And if you think about it, it kind of makes sense. I mean, the first 30 minutes, the price is going to continue to move, right? I'm a little bit apprehensive about a long position here with that IB above there. I'd like to see him. This is probably the good test here. A lot of longs anticipating higher. Would probably need to get shaken out, I'm guessing. And here they go with that shakeout story I was talking about a minute ago. And there's that VPOC migration. And that can't necessarily be assumed as a long. I'm going to try this a little bit late over the developing value area high and the VPOC migration up and see what that does. See if that works. Both of those are structured trades that I have, and the target being the well ahead of any kind of liquidity. And then my second target would be way up here, head of the low volume node or the VPOC, assuming I don't get stopped out in the meantime. And that didn't work out like I had it planned. this is why taking the VPOC migration mechanically is not a good idea. I was looking for it to trade above here, which it did, but probably premature, I guess. Premature. Yeah, we'll see. How about lows? Where are we for lows? Well, we're okay ahead of, the only problem we got is this price check at L3 right down here, which they're probably going to take in this low volume area. So shall I move these stops down? The problem is that cancels out my statistics, because the statistics need to have specific stops in order to be validated. It's a really hard decision to make. Hard decision to make. It is what it is. Random market, the magic of trading. 150. Yeah. I seem to have a problem getting around that now, which is kind of disappointing. And another little, oh, well, I missed this one here. Not paying attention here to my stuff. And then another one here. I would think, well, statistics are strong that the VPOC, overnight VPOC will be taken out in this session. The big question now is, it doesn't say when. Could be 1 second. Look at that right there. I tell you, I think my entries are probably one of the worst. My definitely weak part, which I guess is a function of confirmation, I guess. I don't know. But, look at that entry. This bold green line is my entry. Well, finally, they're going to get over the top of the damn thing. Now, if they get up here to my scale, this first scale, which seems like it's going to happen, may not. There we go. So now I'm risk neutral. And that's 201. Okay, now all I have to do at this point is bring my this trailing a little bitty stop over the top of, this is the break even line. Okay, so I am now, the worst that can possibly happen to me at this point is a scratch, and now I have to start thinking about what am I going to do about risk management, trade management. Shall I pull it up here and lock in this and look for that, which is exactly what I'm going to do. Actually, a little bit more than that. Now I've moved my stop for trade management. Okay. So now the worst that's going to happen, and maybe what will happen, is I'll get taken out of that. But I think we might have some upward movement here. I'm hoping. And I'd like to see the stops get taken out up there at that EVPOC. That'd be fun. And I might point out would be, another 7 or 8 ticks, or points. So let's go, boys and girls. Up we go. Light this candle. High volume node at the, this is a high volume node from the microcomposite. We've taken out the IB stat. We're at the RTH high at this point. We have a low volume node up there from some time ago. I'll now trail up to below here into this low volume area below this swing low. Like that. And again. And I would think, well, that they're probably looking at that stat, 5675-ish, maybe. And I'm pulling this up right there again. Oh, come on. Get up there and hit that target. Just have a little bit to go, boys and girls. One more push. One more push. Here we go. Get up there. There you go. Come on, girls. Everybody push. Everybody push. One more little push. Boom. There we go. Okay. 0545. So there we have it. And that was pretty sweet. There we go. Wow, that's a pretty classic, great trade there as far as I'm concerned. Pretty much everything. Now it's likely to continue on to the MC high, etc. But I'm happy with my performance there. My trade management was sound. My target was the EVPOC, and I guess the thing to do would have been to keep moving that target up. Woulda, coulda, shoulda. But if I kept moving this target higher towards this next target level, and then continue to trade management by trailing. Let's just do that. Let's just do that for fun. Well, there would have been my stop, and there's the stop out. Okay, so I would have been taken out with another, well, nothing. Actually, would have been taken out just below the EVPOC, which is where my target, which is where my target was taken. So there you go. Now I need to take my snap here, which I always do. My journalytics journal, I keep a record of. I keep snaps of everything. It's pretty handy. Well, Mom, life's trade today. Hey, Mom. Oh, shit. Sorry. Thought I was muted. Excuse me. Okay, so I guess I could I do a screen cap of all my trades and annotate them. I suppose that would be something to see, perhaps. Let's see if this works. I don't know. No. Oh. No, it's either the window or the display. Well, wait, maybe it's the window. Yeah, well, we got to have. Huh. Oh, well. Okay. Maybe it'll work over here. Pretty weird. Yeah, there we go. I do a screen snap and then annotate this and also a snap of my IRT, which is here. So this is IRT at the entry. This is the result of the trade, entry, commentary, date, the open type, context, trigger, some comment about that, what my targets were, scale, and then the result of the trade management, and target to hit. So that's these things are posted in my in my journal for every trade on Journalytics, and they're here on my computer as far as snaps go. Oh, that's a little tidbit of useless information there, probably, but just for me to know. Yeah. And all the late bloomers that were just FOMOing to the max to get that second burst are now licking their wounds. This, however, could be, let me see, IRT. This was the IR pull back to the low volume area right here, this real low volume. See if I can do this. Yeah, there, this low volume area. Tested into that, didn't get anywhere, and they may likely take, we got 1, 2, 3 hits at the high, and we've got some stats up here, right? The MC high, MC high is the previous RTH high because it was done yesterday, and this is the overnight high. So that's some other stats that are living around up there. What's these? And yeah, oh shit. Sorry. Wrong. Yeah. So I'm busy pointing out a bunch of stuff on the wrong screen. So here we are tested back down to this liquidity area, and quite possibly trading back up to remaining targets, which is the MC high, which happens to be yesterday's regular trading session high. That's when that was put in. Here is the overnight high, and there's a pile of liquidity living right up here. Very high probability. Well, 74% that will hit this. I got to go look up the RTH high. There's no stat recorded or in the study for MC because it's pretty arbitrarily drawn. But this test right here of this liquidity, the low volume 33, 1, 2, that's kind of exhaustion. Then you're going to trade it up. The problem with these kind of trades after a move up is that people, sometimes they let this kind of sucker plays, that people get all excited and get in them and they get hammered. But I would say very high probability, 74% for just the overnight high. We're going to take these stats out to the top side. Let me see what the stat is for previous RTH high. And we're lower in range, remember. I have to remember that. Previous high is only 37.8%, so that's not terribly a lot, right? 37.8. That's not awfully convincing, but yeah, anyway. Anyway, here we are. And as I'm looking that up and typing it, it goes up and makes the stat, And this is a location where a lot of FOMO gets triggered. And people start dreaming up all kinds of reasons for going long up here. And perhaps they're valid ones. Going to take out a new high a day. That would be breakout trader stuff. We've got these stats just above. There's room here. This would have been the place, the mean reversion kind of a deal here, where we ran out of volume down here, and then up we go. Yeah. And so there we go. Now, another opportune pullback for a long. However, 57 to where? 59, that's two handles. That ain't enough. Not enough room. Man, I keep getting the mute wrong. Sorry about that. Well, I guess I need to update all my little timestampy things here. So the IB high stat is long gone. The overnight POC stat is gone. Looks like we're going to snake up here and get the others. And there could be a whole big lift of stops living above here. There could be lots of fuel right there. I don't know what the hell one means. Got to be so big it doesn't display, maybe? Huh. Yeah. Okay. So phenomenon that I think a lot of traders have, which I certainly do. This is quite a nice test back to this liquidity, this low volume area, the overnight VPOC-ish, and then up towards the new highs up there. But I'm going to be extremely careful. What I was going to say was I think it's probably indicative or symptomatic of a lot of traders. It certainly is for me that when you have a good trade and a win, everything worked out pretty good. Like that last trade, the trade management worked sweet. The entry was a little bit off, but other than that, you tend to take your foot off the gas. When in reality, you ought to be hitting them because you're in tune, right? That's the theory. And on the other side of that coin, people become much more focused and aggressive traders when they're coming off a loss, when they're trying to work off a loss. I do the same thing. I very rarely end a day on a loss. I mean, I obviously do some, but a lot of times I will have a loss. A lot of the trades in my journal are small wins. $100 or $57 or some crap like that. And I put them all on the top of the stream because I've taken a loss first. And so I've not only made up that loss, which is $300 roughly dollars because it's 24 points or 25 points or ticks, then I've made that up and then some. So it looks like small trades, small win rate, when in reality, it's poor execution first and then working, and then making it up. In other words, making up lost ground, not revenge trading, but just heightened focus, which ought to be the other way around. I mean, maybe not the other way around, but certainly should continue with equal focus on winning day after a good win. I think that's a bit of psychology that I've noticed about myself, and I've seen a lot of people chat similarly. We're slamming around a little micro consolidation area, this little micro composite right here, distribution area, consolidation area, I'm sorry. And teasing everybody about this RTH high. So I'm not sure what else I want to do here. 10:20. Okay. Early in the morning. Market's been open just a little under 2 hours now, hour and 50 minutes. Here we have that's today. So if you had to say it fast, what's the context? Up, and that's important to know, in my opinion. Now let's look at what I mean by showing that and saying that is, how the hell do you know what the context is over here? Okay, if you're, experienced with Bookmap and understand what you're looking at and are somewhat familiar with volume profile or the dome, you can see that we're at the top end of today's range. And if you wind that down, you can see that that's we're up here on today's range. And that's about, say, 30, it's about 30 points, right? 30 to 60, it's about a 30-point range. So that's where we are. To me, however, then, if you scroll back here to the open, which is right here, then you can get a grasp, or at least I can understand, that we're in a basic uptrend. It's just easier for me to spot quickly on my Renko chart, which is just a easier snapshot. This is much more detail. Tom has a comment that this is the Bookmap is the tip of the spear, or something like that he calls it. And he has IRT and probably other tools also, but that's kind of how I think that's the best way to think about it. It's like the granular, and a lot of these traders, whatever his name is, the CTI, ICT, whatever that guy's name is, and people like that, they all talk about identifying stuff on the higher time frame and then, dropping down to a lower time frame for execution. So same idea. It's the same idea exactly. So the Bookmap is the lower time frame that you've dropped down to, and this thing you can wind this thing out and get down to milliseconds. It's pretty crazy. Each one of these dividing marks is 5 seconds. Seconds. Or so, yeah, seconds. It's just, and you can keep going with the thing. I think why anybody would do that beats the hell out of me, but they are. So this is a pretty good tool for doing the small, close, micro time frame for trading, that kind of thing, whatever the right word is, smaller time frame, or but it's real easy to get myopic and not realize where the hell you are in the scheme of things, right? I think that's why it's real important to have something visible immediately that you're looking at all the time, so you realize where the hell you are. Like just looking at this right here and this, you realize you're at the top of this range, but looking at this, what's going on? But you zoom over here and it's pretty obvious what's going on. We're in an up range, big drive here, consolidation that's narrowing down, and we're still at the top of the range in a narrowing consolidation. much easier for me to keep a concept of the big picture or the perspective of the big picture. So here we are. And just to find out where that, okay, let's just, I think this works. No, I was wrong. I thought you could get over here. Well, shoot. All right, so here's the trade of the morning so far. A late long entry on the VPOC migration up, or anticipation of it, I guess you could say over here. Looking at the IB high, looking for an IB high, and then targeting the overnight VPOC. There was plenty of range. This at the time I entered, this wasn't in here yet, so this was wide open range up to here, ahead of this liquidity. And then the second target, just by the bracket setup, is here, which I moved up to my identified target of the just a few ticks, ahead of the EVPOC. Got scaled out right away here. Upon scaling and market movement up to past this low volume area, I brought my trailing stop. First move of the trailing stop was above the break even to cover scratch, to make it a scratch and a commission. The deal with that is the first break even stop, or the first stop, is 12 ticks. The second one is 13 ticks because of a idiosyncrasy of the multi-bracket. You can't have both stops originally set at the same stop. They have to be a tick apart. So I have 12 and 13. Now I can move them both together immediately if I want to, but in this case, why? So it got my scale. I moved my remaining stop, which was at 13 ticks, up here inside the break-even line to cover commissions, and then wait and see. Market took off like a rabbit. So I moved this trailing stop up to here for trade management above my scale. Couple of ticks. Again to here. Market continues higher to here. Market continues higher to here. And there was my target, and my target was hit. Now that took a walloping about 7 minutes. Okay. Enter at, say, 35, almost on the dot. 40, there's 5 minutes in. We're scaled and risk neutral. Target's taken out about 7 minutes. 7 minutes total in the trade, and just for grins, that's $737. Profit in 7 minutes, one trade on 2 contracts. Pretty good. You do that every day, you got a pretty good salary going on. I think there's 220 trading days in a year. Ooh, we got a big pop to the upside here on the NQ. I better stop talking and start looking. What's going on over here? Yeah, oh, there we go, baby. Wow, something happened. Something happened there. The hell is this? So that, in my opinion, is the MC high, which I talked about earlier. And then when they hit that, the stops got taken out. That's all the people that were short through that whole micro composite area. But what a lovely trade up. And I wish I would have been on that. That would have been snazzy. From 56 to 68, 12 points. Anywhere along here is a pretty clean entry. Any of these lows down here, which is, just leaning on this liquidity is all you got to lean on. You'd be laughing all the way to the bank with no heat. Damn, there was another good hit. There was another 12 ticks. 500, 600 bucks. Nice morning. Would have been a nice morning. Still is a nice, 700 bucks a nice morning. I mean, what do you want? See if I can do something here while I'm doing something else, which is always exciting. I'm going to see if I can edit the stream stuff. Oops, wrong one. Tube Studio. Ouch, my neck. Content. Yeah, so there's a lot of stuff going on here. Man. I don't know why that does that. Let's see if that does something here. I'm trying to do the put in the bookmark or the timestamp stuff on this stream while it's live. Just out of curiosity, I got no clue whether that works or not. I'm trying to figure out how to do this on the fly so that I don't have to, sit and go back and listen to everything over again and catch the times. And we'll see if this works. Here we go again for another bump to the high. What do they got up above there now? Wow. Somebody's happy about something. Yeah, so let's see what happens. Oh, I just figured something out. Well, I just realized I had set up a hotkey, the M key on my keyboard, as a mute for OBS so that I could not have to go looking after the mic mute with my mouse. And I just realized that whenever I type an M, in the case of editing this live stream title, it is muting in and out my microphone. So next stop on the equipment list here is a Stream Deck, whatever it's called. I forgot the name. Duo, whatever it is. And then I won't have to. I will have these things. Wow, look at this market go. Damn. So the theory, I guess, is that, well, first of all, off of this liquidity and the developing value area high would be the much more prudent trade within my trade plan. You could sort of call this, tests and liquidity and exhaustion, and then you got lucky. Anyway, up here. Now up here, there's really nothing for me other than leaning on this liquidity, which I think is not really in my world. Targeting what? Higher? Well, this is just this, in my opinion here, was simply the stops that have been living over this high, MC high, for a long time. And now that they got them out, they're probably going to just keep ripping, right? There's a general market perception of bullish longs. Earnings have been good. Numbers have been good. That's what I think. And who the hell knows if I'm right. Well, now I'm all dressed up, no place to go. I got a Friday, no external distractions, really. It's only 10:45 in the morning. I've got a real nice trade locked in the bag. And all dressed up, no place to go here. I have been down the road of a nice first trade like this. And then, then you take another one and it's a loss. And so you want to make that back. And, it's like a slippery slope. And the next thing you know, you're covered in crap and land at the bottom, at the bottom of the hill. And one thing I will make a comment about here, and that is emotional capital. And I'm going to actually put this, there we go. Emotional capital is huge, and I don't hear a lot of people talking about it, at least not in that with that title anyway. To me, it's huge, and it's as, if not more important than real capital. And it's, I don't think there's any successful professional trader out there. Well, that's a stupid thing to say. That's a generalization, and of course there must be some. But I think the majority of professional traders would agree that the emotional side of the game is much, much more important, harder to deal with than the mechanical side. And that's, I know that for a fact myself. And that's where all of our, lizard brains and things that, saved us when we were evolving on the savannah, running away from the tiger or whatever else, fear, risk aversion, the ability to spot patterns, all those kind of things are in our DNA. And that's DNA as humans. And that's none of that is really helpful to a trader. You run to risk, not away from it. You have, spotting patterns can break your account because you start making up crap. Oh, look at this. There's that. Oh boy, this is that, Well, look here. Oh, wow. We tested here. We tested here. We tested this. I'm going to lean in this micro composite here. Well, that's crap. What is that? That's nothing. I mean, in my opinion, that's not part of my trade plan. So that's much more deleterious to success, I think, than the mechanics of actually trading. Once you get the basic stuff down, you got to know what all these numbers and these things mean on your charts or on your book map, and how to interpret volume profile. Of course, the basics. But I think that the emotional side of the game, FOMO, revenge trading, all those kind of things are much more important to understand. You'll never overcome any of them. You're never going to be, you're never going to not feel FOMO or feel the fear of loss, but you have to control it and and that's the difference. You'll never eliminate it. You just have to recognize it, control it, and maintain your logical mind in control and not the monkey mind. And one of the bigger emotional capital problems is going into a weekend or a long holiday in the hole. That's a huge hit. So that's something to be aware of, in my view. Bit of advice from somebody who's been at this a while and had success and failure. Wow. And I think that a lot of that last dialogue was just muted, and I'm not sure what. I got to figure out about this M button, I guess. Well, I hope some of that went across. I was just relating a story about a TopStep guy, an interview with a TopStep trader who, I think you have to have the latest and greatest equipment, the best you can to give yourself an edge. And I prefer quiet and focused. And this guy had made like $15,000 in a month, and he was trading from his cell phone while he was running a Bobcat skip loader on construction. And if you've never run a Bobcat, you steer with your feet, both hands, and run the bucket. So it's a full body operation. And unless he's an octopus, I don't even know what, he must have a cell phone propped up somewhere. I don't know, but yeah, so there you go. And good for him. Fantastic. I always use that to set to recalibrate my thinking about when I'm looking at some more equipment or something else. I have no idea whether that's I didn't notice when the mute was on. There's no thing that pops up on my screens in front of me that says it's OBS is muted or not. And I've discovered that because I set the hotkey up on my keyboard as an M to mute. If I type anything or do something there, I accidentally hit that M. Well, there you go. Stupid. Anyway. Pleased about the day. I'm going to be extremely, I should have been on this next long off the developing value area high, as I've just said about 10 times. My way of dealing with FOMO and preventing chasing, I find that if I articulate what I'm thinking, it brings it to the top and more rationally, then it falls into my rational process, and I tried to hold my stupid to a minimum. Yeah. But this was very definitely, retest, test, retest, certain degree of exhaustion, 111, 41, 34. This is all just below, developing value area high is now lifted up a little bit. It used to be right here. Used to be right there. And EVPOC, and when they cleared that again, that would have been the long. And that was another almost 20 points, soon to be 20 points. Fantastic. Fantastic. Quite a nice day. These kind of trendy days typically are hard for me to trade. I will say this, buy the dip deal, like right now. Somebody bought that dip and they're ahead, You buy this pullback right here at a low volume node, buy that pullback, and you're scaled right here. I haven't wound in too tight. I apologize. Buy that dip, you're scaled right here. But this is not really a structured trade of mine, because this isn't a structured trade. It's just a pullback to an area, kind of. But there's no real trigger, as I have understood them. So, yeah. Woulda, shoulda, coulda. RMT, rear view mirror trading, baby. I'm going to be an RMT guru on whatever they call Twitter nowadays. Jesus. It's really phenomenal how many complete bullshit artists there are talking everything about trading. Shocks me. I go for a 10.5 mile jaunt every weekend, and while I'm it's just mind-numbingly boring, obviously, even though it's out kind of in the country around a reservoir here. Pretty lovely terrain, actually, but it's still kind of boring. And so I listen to various things on YouTube, and Jesus Christ, it's amazing the stuff that's out there. The people, first thing everybody's yapping about a big win rate, which means exactly nothing. You can, 100% win rate. And if your risk reward ratio is upside down, well, you're, going straight into the toilet. So it's just silly. You can be vastly profitable with a 50 or below 50% win rate if your wins are substantially, your risk reward ratio is skewed in your favor substantially. If your risk is 1 and your reward is 10, that's what matters. And the profitability number, which is what I've just built into my local journal, Excel tool to calculate expectancy and win rate for, setups, context, and all that stuff. And because I've owned Jigsaw for a long time, I was able to pick up the Journalytics, which is a journal that online journal that Pete put together in his team. And it automatically uploads from Rhythmic and does all the crap for you. So it's pretty convenient, but it puts out a lot of stats, about everything you can imagine. But I also prefer to have the thing on my, my own stuff, my own equipment here. Wow. That was quite the second lift. Excuse me. Here's that first lift off this would be a IB high. The IB high stat was taken right there. It's after 9:30. And it's the first time that prices crossed either the IB low or the IB high. So the stat is taken right there. Tests back to the IB high. So it's now an IB configuration trade, viable. And up we go. And then up we go. Consolidate. Up we go. I mean, wow, what a day. I only got a small up we go. I got one of the dipsy doodles there. Not all of them. What did I get, actually? I got stuff everywhere. I can't really. And I'll be right back. And so, or as they used to say, well, 3 holes in the ground, too deep a thought for your shallow mind. Cowboy euphemisms. I wonder how many kitties have shorted that high. I'll bet a lot. And if you shorted right here, or anywhere along here, you got scaled down here and paid down here. So, yeah, but it's no question about the fact that is counter rotation and the opposing army, rather than the advancing army. Better seen over here. What is the context of the day? There's only one thing you can say is north. So shorting any of these, like right here, shorting any of these highs are counter rotation trades. And lots of people do that. Lots of people make money doing that. And then there's also quite a handful of retail guys that try to pick tops and bottoms and get their ass handed to them. Again, show me the statistics of picking a top and shorting or counter trend trading in an up move, in a directional move. And if you can figure out a way to, first of all, figure out a way to identify that and to have a structured trade for that, and then collect the stats for that, and then verify that you have a statistically significant positive expectancy or edge for that trade. Marvelous. But that's really where the rubber meets the road. All of this is just BS and bus tickets unless you've got a structured trade. And in order to do that, a structured verified trade with an edge. And the only way to do that is collect the statistics. And then it's just math and a numbers game. All this other shit is flashing lights and it's like a casino. What possible effect on the outcome do flashing lights and bells going off and ringing this and all the crap you hear in a casino around the slot machines has absolutely nothing to do with the percentages of payout. It's just to trick the human mind, get the human monkey mind. Ooh, shiny. Get all those things in play. Yes. Bright lights. I kind of enjoy this streaming, especially on a nice win. One trade, 7 minutes. Oh, $100 a minute. Well, there you go. About that much. Didn't think about that before. Yeah, I have a lot to do this weekend. It's going to be, let's hope. Oh, yeah. Hell yes, it's warm. 22C out there now. That's whatever that is. It's about 70 something. Fahrenheit. So that's nice. For a February 2nd, where I grew up, it used to be around 40 below zero for mostly all of January and February, Fahrenheit. And snow higher in your nose. Great way to grow up, though. A lot to be said for this, kind of green all the time and gets real cold. And then, last week or something like that, a week before, it was below freezing. And now it's 70 degrees. Kind of screws the plants up, though. They start thinking it's summer and getting all buddy and everything. And then kaboom. And the next cold snap comes along. But, it happens, I guess. Yeah, so these boys that shorted are all cheering and yaying and yipping, and they got the pom-poms out and they're doing all kinds of stuff. We're sort of at a level here. Whatever this was, whatever this level is, I don't really know. It hasn't been in there for too long. Got no idea what that level's about. What is that? Let's see. I guess it's just this low volume area here and this upper distribution, I guess. That seems to be it. I don't see anything really else going on. Significance levels wise or any of that sort of thing. So, yeah, beats me. Wow. I think I might have heard my doorbell. Let me go see if I did or if I'm just, my ears are ringing exceptionally loudly this morning. Just my ears, I guess. Well, I don't know. Well, yeah. I think I will very definitely close the stream off bottom of the hour. That'll be 3.5 hours. Yeah, I don't know. Brain fart, I guess. I get to reading something and then I forget to think about what I'm doing. So I apologize. And I will close the stream here at 11:30. I have some other stuff I could do. And I'm pleased with the trade results of the day. And like referring back to my discussion there about psychological capital, I'm going to be acutely aware of that. And yeah. It is getting pretty toppy. Short, baby. We have, this is the micro composite. Here we were through yesterday. Here's today. People are pretty excited about these markets. That's for sure. What the hell happened there? Can't see how I do that. I know what it is. Should not be lazy. And I'll do it later. It's the damn crosshairs. See if I can do it better with this. No, it's still wanting to do that, so I'm not going to mess with it anymore now. I'll do it later. Typically, don't include the current day in the micro composite anyhow, but the reason being, of course, once included, then they might, then the high is going to jump up to the high here. So, I don't post those anywhere. I guess I could. That's something I could do, I think. Have to figure out a way to identify just this, because you see my micro composites are all of them, all that we've had. Back for, I don't know, many days. Market profile over here. Yeah. Oh, man. Yeah. And so, beautiful day, nice trade. Weekend coming up. I will pull this trade end the stream here at the bottom of the hour. I have no intentions of, and I've made a pretty firm commitment not to take any trades off stream. That's also another good way to nip, over trading or revenge trading or something like that in the butt. I don't really suffer from revenge trading or over trading anymore. I lost enough money in the beginning back in 2000. Started trading in 1999, about just at the end of the .com bubble. So that was a real interesting experience. And then lost my ass in 911. I was long a bunch of stuff. I was trading equities then and was long a bunch of stuff and sat there watching CNN and CNBC. Actually had that up on a TV in my office and watched the planes fly into the trade center, and that was the end of that. Then they shut off while the markets were closed, they wouldn't let you short. And they put in the day trader rule and a whole bunch of stuff. So it was, never traded equities again. That was that. And had no freaking clue what I was doing. Just, it was a video game. And in those days, the websites and the day trading people were just, it was literally a casino, flashing lights and bells going off. It was just some guy that had probably programmed a slot machine at some point. I had a guess. I don't know, because man, that's exactly what it was all about. It was funny. Anyway, Cyber Trader. That was the platform, and then I ended up over at Interactive Broker IB. That one just at the end there. But yeah. Anyway, so that was a long time ago, and over trading isn't really a problem. That's good. Everybody has all of these problems. The key is to learn how to deal with them. Never get over the desire, or I guess it's like an addict of some variety. Once that dopamine triggers in your brain, or the fear thing, it's always going to be there because it's in our DNA. But you have to not react to it. Here we go for another high. Wow. Wow, wow, wow. Here they are. Now there's going to be another stop run because all these dorks up here that were all excited that it was going to go south. Everybody was picking the top. Watch this. I'm saying 80s off the table here in about a blink of an eye. Boom. Or not. Surprised there wasn't more of a stop run up there. They only tested it up that one time, but all of these guys over here that were these guys that, called the top, shorted this, all happy, shorted. Think about it. Lower lows, lower highs. I think you call that a bull flag maybe, when it's a tapering. I don't know. Yeah, I'm not a big. There you go. There's that 80. I was pretty sure there were some stops there. Man, I suppose there's some fellas that have made, now pushing towards 30 points. Wow. On this lift. And if you're in there, I mean, keep hearing that damn bing noise. I don't know whether it's coming off one of my other computers or what. Right back again. Jesus. hearing bells, I guess. Look at that. Easier visualized over here. There's the open. Look at that crap. 35 to 81, 50 points, baby. 45 points up. 29 to 81. 50 points off the low. Points, not ticks. 200 ticks. 54s or 50s, yeah. 200 ticks. That's that. And now they're going to, who the hell knows where they're going to go now. Just, crazy. Light-headed. They're light-headed, baby. Beats me. But I am enjoying watching this. Look at that thing go. I guess you could say, this might be worth interesting. They have traded through this low volume area in the micro composite. High time frame, low volume area. And now they're up here at the bottom of this little small distribution from God knows when. It could be up to a couple thousand days ago. But yeah, this is the big high time frame. This is the high time frame profile. Let's see something here. Wait, I think that's this one here. Yeah. All bars. That's about 2,000 days then, I guess, if I'm not mistaken. So this low volume area right here, which I actually had this area here at the low volume indicated on my book map a couple days ago. Somewhere down here. Low volume node right there. That's where it started. I didn't have the top of it. I was just noting the bottom end of it. Yeah. Well, I'm happy with the trade I have. It would have been nice to have more than double that with this latest, the second push. And I would hope that others have. I'm also content to enjoy my day and look forward to a Monday. And, Powell, apparently, Fed Chairman Powell is going to be speaking on 60 Minutes Sunday night. So, whatever the hell that is, I don't ever watch TV, but I probably 7 or 8, I would think. Market opens 1700, so Sunday ETH could be kind of jumpy. However, the FOMC minutes and rate and all that crap was Wednesday, and so I think they might have all that priced in. Look at this. Tested back to whatever volume that was, and Yahoo! There we go. Pretty funny. What is 80? All I can say again is that it looks like it's just working the distributions, right? So they traded this distribution right here, I load, and now they ran up here, and now they're doing the same thing up here. I guess kind of looks that way to me, but don't have anything to say that would be a trade location for me. So I'm going to be happy with what I got. Happy with what I've got. And I shot right past my bottom of the hour idea. I get interested in watching the market and narrating. The purpose of this stream, of course, all the disclaimer stuff about you're going to lose your ass in futures and future results are not indicative, or past performance not indicative of future results, any of that stuff. Nothing I say is a trade recommendation, blah, 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 blah. It's all in the description. The purpose of this stream is my journal, video live journal. That's why I narrate so much, because that's the whole point. When I review these streams, I can see what I'm seeing and hear what I was thinking and go, well, but you were too late on that entry or whatever else, or what are you thinking, or a good thought, whatever it is. That's the purpose. And hopefully if anybody else gets value out of it, that's good too. I'm consistently profitable, trade very conservatively, trade risk neutral, do contracts. You can made $700 in 7 minutes. There you are. I guess that's pretty good. I guess that's okay. I don't, and risk $300, so that's 2 to 1 risk reward, because the risk neutral stop is 3 points. excuse me, 3 points or 12 ticks per contract, both the same. And so that's $300 or 24 contract, 24 ticks. And there you have it. And I never, and I mean, I never move my stops out. I have in a couple of instances where I was stupid and took a trade. Let's pretend that I was going to take a trade right here. So that's 77.5, right? And this is the first obstacle. So I've got a scale before 79. That's kind of a poor example. What I have done was move my initial scale target down to below the obstacle. And that requires, by definition, that the stop be moved closer to the entry by the same amount so that the stop is equal to the scale. That trade can't be included in the statistics or the data set for the statistics because those parameters have to be the same. You can't say my IB, or let's say my mean reversion trade has got this but one time I had a stop of 10 ticks and then another time I had a stop of 50 ticks and then another time I had a stop. That's crap. They've all got to be the same. Otherwise it cannot be considered statistically significant. That's my story and I'm sticking to it, and that's correct. If you want to do statistics that aren't around your trades, for example, what's the probability that when the VPOC is below the VWAP in a down context or south context, does the price go from the VWAP to the VPOC? That's a statistic, just like any of the other statistics that you want to calculate. The rules all have to be the same, obviously, and they will be in that case, but you can do that. But that's got nothing to do with your trade. That's just a statistic of how often that thing might work, but it doesn't have anything to do with or take into consideration at all stops, scale, or any of that stuff. It might go from VWAP to the POC 90% of the time. But it might have gone from VWAP up 25 points before it went down to the POC. Well, that's not a statistically significant trade. Your ass is, grass. You stopped out and lost long ago. That's why vetting each individual trade with specific stops and targets is so important to determine your edge. Otherwise, it's just a random probability, like, there's a 90-something% probability that the high or low is going to get taken out. Yeah, well, good, great. What's going to happen in the meantime? And what was that all about? Now it's about bumming out a bunch of people that were long, I guess, and making guys that shorted the top feeling pretty happy. Wow, look at that thing go. What is that? There must be some news or something now. It's got to be something. See if I can figure out where I am here. I'm out in there. Wow. Huh. Oh, damn it. I just don't know what's going on now. So, yeah, I don't know what to say about that, but I was looking if it was news or something. I don't see anything. A lot of comments about perma bulls getting the rug pulled out from under them and whatever else. That's perhaps not as scientific as I would imagine. The thing that has to be considered here, if we look over here, okay, these guys are from about here. Everybody's really excited about the upside, so they're buying, and they're buying, and they're buying, and they're buying. You have to ask yourself, who are they buying from? That is typically the higher time frame, who is providing the liquidity and selling to these guys. And there will come a time when those people, the higher time frame people, and all the people that were selling to these guys all the way up, taking the other side of those trades, say, well, thank you very much. Boom. And they take their profit. This guy didn't take much profit from this sale. This guy got a lot of profit from that sale, or maybe he was selling in here, That's what I think. And that's what I believe to be what causes this stuff. Again with the damn M. Yeah. So now I'm really going to end the stream here at the top of the hour. I've got a number of chapters there with various things to be able to recall when I need to. My analysis of the market dynamics about these kinds of things, about these kinds of markets, and various other of my theories, my market dynamics. And that's going to be nice. In another few minutes here, I'll shut her down and get a head start on a nice weekend. Yeah. What a difference a win makes, huh? Interesting. Look at this. You see? Boom. All those stops get wiped out. Where are they trading now? Right back at the previous high, within spitting distance of the bottom of this low volume area. It'll be real interesting to see how this day winds up. Obviously, it always is. One thing about the market, win, lose, or draw, it's always really interesting, and it's really great to be a participant in it. And if you stop and think about it, it's really what makes the world go round. I mean, this is money, and money makes the world go round, and we're so fortunate to be able to do this. And I think it's without a doubt the most fantastic opportunity certainly available to me. And I've had a lot of pretty great opportunities and a real fortunate life. But, I'm not a rock star. I think that's got to be probably the ultimate fortunate circumstance. Imagine walking out on that stage, never mind the money they make, but imagine walking out on the stage and having hundreds of thousands of people focus all of their their complete focus and their energy directly at you. That's got to be incredible. And then on top of that, make millions of dollars, Jesus, it's just really, that's got to be the most admirable deal in my mind, and of course, certainly not attainable by many. More so than actors, even, because actors, that's all contrived. It's acting, right? And it's not live on the spot, so big difference. But I think for the average person, this has got to be the most phenomenal opportunity that I'm aware of that's legitimate. All this make $1 gazillion selling bullshit on somewhere, Amazon or something. I don't think any of that's true, probably. I think the only people making money on most of that stuff are the people selling the courses on how to do it. And that's not any big revelation. I think everybody's been aware of that for years. But for some reason, as W.C. Fields or somebody said, there's a sucker born every minute. I guess that's how it works. Yeah. So anyway. 1 minute till I'll wrap her up here. Have a great weekend, and I'll be charts and everything will be back up 1700 Sunday evening, and hopefully stream on Monday morning.